Okay, awesome. Yeah, so why don't we get started? Maybe we'll start with a quick introduction roundtable for everyone who's speaking today, and then we can sort of dive right in. Cool. I can start. Hi, hey everyone. I'm Ryu, one of the core contributors at Zero One Exchange. And as you guys know, we're building decentralized derivatives exchange on Solana, starting with perpetual futures powers. And then we've also introduced Evers in DevNet if you were around to try that. With that, I'll pass the baton to Ali, who is also our host for today's Twitter Space.
Hey everyone, my name's Ali. I've been helping the 01 team since I met them in Lisbon. Super bright team that's done some really cool, innovative stuff in the options and kind of the decentralized derivative space. And so just glad to be here hosting the talk for today. So I'll let Stratos go next.
Yeah, I guess I'm Stratos, one of the founders of O1. Excited to be here and excited to talk to everyone here. Yeah.
Cool. Ming, you want to go ahead and introduce yourself?
Hey, sure. So I'm Ming, also met the 01 team in Lisbon. Think that what they're doing is super cool. And so my background is in traditional finance. So less on the crypto option side, more on the kind of stock and kind of a regular stock option side.
Cool. Thank you so much. Sam, you want to go ahead and introduce yourself?
Yeah, sure. Hi, everyone. My name is Sam, and I'm an options quant with LedgerPrime. LedgerPrime is a multi-strat crypto hedge fund with a fairly large presence in the crypto derivatives market-making business. In particular, we're known for being like a leading options market maker in the space. And over the past few years, we've gotten pretty deep in the DeFi ecosystem, particularly on option-related projects. And as a result, that's how we sort of got in touch with the 01 team. And yeah, happy to be here. Thanks for having me.
Cool. And then Pattern Research, would love to hear a bit about you guys as well.
Hey, everyone. This is Akshay from Pattern. We're a crypto fund. Similar to LedgerPrime, we've been active in the space for a few years now. Active liquidity providers in crypto derivatives and specifically options. We've been active in the centralized landscape for a while and have been pushing to DeFi in the last year or two and excited to explore.
Great. Thank you so much. Great. So with that, we can go ahead and get started. So this topic, we wanted to actually set up something different. And we have obviously Ming, who does traditional options. And then we have, LedgerPrime and Pattern Research, who do more trading on the crypto option side. And so let's kind of kick it off with traditional options. And, Ming, would just love to give you, just for you to give us like a high level overview of just like the options trading markets and kind of the current state of what you're seeing today. And with the kind of idea in mind that, after that, would love to hear from LedgerPrime and Pattern, specifically on the crypto side of things, what they're seeing on the crypto options markets. And maybe we can see some of the similarities and differences, but, it's pretty high level, but this is just kind of to get things kicked off.
Yeah, sure. So I'll start with, I guess, what happened to options post-COVID. And kind of needless to say, volumes have absolutely exploded. And that's, a lot of the reason is because there's been a lot more traders in the market, retail traders. And they're really interested in options because that's kind of their best way to either express a bearish view, because a lot of them don't have margin accounts, and also gain leverage. And so for as well, they're able to have non-linear risk, and so they're able to either kind of put in a little bit of money, get a big return, and so it's been a really great kind of speculator instrument.
Great, thank you so much for that overview, and that's really interesting because I think we've also seen a lot of even traditional crypto trading happen since COVID started, where a lot of people have we've seen the volume spike and stuff like that. So would love to hear from, let's go to Pattern Research and see kind of, just kind of what you guys are seeing in the DeFi option space itself?
Yeah, sure. I mean, I think the big theme for this year is going to be DeFi options and specifically DeFi option vaults. And what these products and protocols have kind of brought to the market that has been missing from centralized exchanges for a long time is vol exposure in altcoins across all the different ecosystems. So whether it be ETH, Avalanche, Solana, and on top of that, we're also seeing innovation with everlasting options and power perpetuals. And so I think the DeFi landscape is really broadening the vol offering in a way that the centralized exchanges have not yet.
Great, thank you. And LedgerPrime would love to also hear from you guys what your view is and what you've been seeing for the past kind of year and a half.
I would sort of resonate with Akshay as well. We've definitely seen an explosion in projects building DeFi option vaults, and that sort of brought like a natural flow of systematic option selling in the DeFi space. I think one of the reasons why these particular products will continue to grow in the coming months and years to come is because of their simplicity. Most DeFi folks, or just in general, crypto folks in general, prefer simple and elegant solutions as opposed to like having to pick strikes, maturities, and so forth. And I think a lot of these projects have abstracted away that complexity, which is sort of a testament towards their success. So I would say that, as a whole, we're pretty bullish on the whole option space throughout crypto. And we've yet to see sort of the on-chain trading between like taking different positions take off. But as we sort of see new scaling solutions like L2, or as well as like new projects coming online on Solana, I think that'll make it a little bit more accessible as well.
Great, thank you for that overview. And those are very interesting points that you kind of brought up, and kind of like following on to that question. Maybe we start with pattern, but would love to kind of pick your brain on what really is the difference between, or what are some of the major differences between traditional options and crypto options that you're seeing today?
Yeah, I mean, I think the major difference, obviously, traditionally in crypto options has been that we've got BTC and ETH options on centralized exchanges denominated in BTC and ETH, right? And so that's created kind of, there's obviously a convexity to that. And it's really most of the volume has been concentrated in BTC and ETH because that was the centralized offering. Whereas in traditional markets, you've got the entire stock market, you've got small caps, mid caps, commodities, and kind of options across all of these asset classes. But in crypto, up till this point, it's really been constrained to BTC and ETH. And I think that's kind of the beauty of DeFi options, just going back to the previous point, is that it's really opened up this massive breadth of underlyings and products in the vol space. And so, I think, again, going back to the theme for this year, I think we're really going to see an explosion in pockets of the vol market that didn't even exist 6 months ago.
Cool. Thank you for that. And Ming, just curious, I know, you obviously don't focus on DeFi crypto options, but, high level, do you see any major differences between kind of traditional options and kind of what's being built in the DeFi space?
Yeah, there's so much. Where do I even start? So I'll start by saying that firstly, crypto doesn't trade like stocks. It much more trades like commodities, and you can see that in the vol patterns, where if you look at the volatility skew, it's it's kind of a mirror image of a regular like S&P index, for instance, where you see implied volatility is a lot higher for for out of the money in regular options on kind of on the put side, whereas you see the opposite for commodities, because what happens when there's a panic is people, or when there's a shortage of, let's say, oil, people panic buy. And so you basically see a reverse skew in commodities, and that's what you see for Bitcoin, ETH as well, because people have been mostly panic buying in the last 2 years. So it very much resembles commodities options more than stock options. And then another thing too is obviously in traditional markets, there's these planned events like earnings, certain like data reports, inventory reports, etc. That you don't have in crypto, and so it's there's much less of a like quarterly kind of trader in the market, as and there's not really like timed events to trade volatility around, and so um, and then it's also generally, obviously traditional markets are a lot more mature, so you're going to get a lot of different cohorts of traders. So you have your hedgers, you have your gamma scalpers, you have your regular speculator, directionality speculators, you have your theta gangs, and really we're at the dawn of options in crypto, and so I hear a lot of everyone is focused on these option vaults, and would love to go on about the same thing that of course has been happening over the last like couple of decades, um, with respect to the theta gang in traditional options, but basically it's a very small portion of the options traders in traditional markets, and but that's kind of where we're seeing the beginnings of options volume pick up in crypto.
Great, thanks so much. And it looks like Sam might have dropped off, so we'll kind of wait for him to come back. But in the meantime, maybe we can move on to kind of the next question that we wanted to ask. But thank you for that overview. That was really great, comparing the two. So for pattern research, what's kind of missing today from DeFi options? What would you say is like some of the main or key components that are actually missing today that you're either looking forward to being built, or some of the things that actually people aren't even thinking about today?
Yeah, I mean, I think in my opinion, one of the biggest things that's yet to be really elegantly solved in DeFi options is like true portfolio margin, and a good and kind of efficient margining system that resembles what like centralized exchanges have. We've seen a handful of under collateralized options platforms, and it's definitely a lot better than not. But I think I'm really waiting to see someone kind of crack the problem that is like on-chain portfolio margin.
Great. And it looks like we have Sam back. So Sam, would love to hear, what are some of the things that you think are actually missing today from like the DeFi and options market?
Yeah, I would say that sort of resonating exactly with Akshay. Collateralization is a huge issue, especially for institutional players. It's not really enticing for these larger players to post full collateral just to sell one option. So I think that's sort of a turnoff from them. I would say as well that, in particular, I think it would be really amazing to see if we could get an options AMM working as opposed to having like, order book models, because AMMs tend to be, suited to a certain class of investors or certain market niche. And we haven't really seen that taken off yet as well. That, and then the last point I would say is just education as a whole. As an industry, I think it's sort of our duty to educate the folks in particularly about options, given there's a little bit more complexity relative towards like futures and spot. So I'd say those three things are sort of what's holding options back in DeFi.
Great, thank you so much. So Ming, you kind of talked about some of the differences between kind of traditional options and the DeFi options that exist today. Curious, what's your view on traditional TradeFi institutions entering the DeFi markets, option markets?
I mean, we definitely need them for the liquidity, and we definitely need implied volatility to come down, and that's not going to happen without obviously a ton of more liquidity injected into the market. I do think that they'll only join if it makes sense, if like slippage is not too bad, if there is enough kind of even though it's kind of a chicken and egg problem where they'll come if there isn't enough liquidity, and they're the ones who are responsible for providing that liquidity as well. I think the exchanges could also go a long way by creating incentive programs to bootstrap that liquidity. So we've seen a lot of a lot of other, let's take the perp exchanges for instance. They've done a pretty great job really incentivizing the liquidity, the market makers to come, and I think that's going to be the first step.
Cool. And so, so we heard from, we've heard from Ming, we've heard from Akshay from Pattern Research, and we've heard from Sam from LedgerPrime. So Stratos, let's ask you some questions that, we just went over. Would just like to know, like, what do you see, is missing from the DeFi options markets? And, also it'd be great to highlight some of the key differences that you've come across from traditional options and DeFi options. Obviously you've been building, and would love to hear your thoughts on some of these topics that we just kind of went over.
Yeah, I think like we resonate quite a lot with what Ming, Akshay, and Sam were saying. Like, there's a lot of infrastructure that is lacking, liquidity is lacking, and in general, education is lacking for options, and there's not necessarily a need for options. Like Ming hinted earlier, is that in retail, like has been looking for options in traditional finance because it allows them like for cheap leverage, which is not necessarily a need in crypto when you can go long an altcoin with high beta and have like high returns as well and high leverage. But what we were trying to achieve with the one is to build like a very robust system where we can launch any product in the future with cross margining, cross collateralization, and have everything that Perp Exchange has to offer, but on chain. And as well as like why we like lean down like into trying new products like Everlastings or Power Perps, is that to offer something new, something easily digestible for new market participants, without like having them to learn a lot about volatility, Greeks, whatnot, just like to build a simple interface like with simple ideas. And also keep in mind all of the other projects which can compose over us. So I think like would be a good segue to also talk more about structured products. I think both Ledger and Pattern Research slightly talked about that, but I think like a huge interest in options came from those structured products, and right now like they're doing like millions and millions in volume every week. And I think like continuing to build that up and build more complex products with different returns like could be really interesting, and that's what we want to lean into in the coming month.
Great, thank you so much. Akshay, also wanted to kind of ask you, like, for yourself, what do you think is kind of, how institutional players either may come into the market or how they're kind of affecting the DeFi options that exist today?
Yeah, I mean, I think for institutional players, the logical first place to enter is the centralized exchanges, and so I think it'll actually be some time before we see the major institutions push into DeFi. I think what'll end up happening, and it's sort of what we're seeing right now, is we'll see vol and kind of spreads collapse in the centralized exchanges in the major products like BTC and ETH, and I think the leverage and more like retail open interest will start shifting towards the altcoins and the alt vol products that all of these DeFi protocols are listing. I am really curious to know when institutions will make it to DeFi, and I think it's just a matter of they move slower, and they're going to let people like us kind of test the waters first before getting there.
Actually, I want to kind of like double down like on this volatility question, because I believe like Ming also like wrote a thread about all the structured products, and as I said, it's been like a hot topic over a past few weeks, and like would love to hear like what you think about decreased volatility and what's going to happen to all the structured products. And I think like Sam is joining back on. I would love to hear his thoughts as well.
Yeah, sure. I mean, I think there's a handful of reasons why we're seeing a decrease in volatility, and specifically BTC and ETH. I mean, I think as we've seen the basis compress, that leads to less leverage in the system and less liquidations, which is obviously less volatility. I think as this sort of multi-chain narrative has strengthened, and as outlets for people to trade other altcoins and alt perps have kind of proliferated. We're just seeing less retail interest perhaps in trading BTC and ETH perps and more in, all of these other coins, right? And so I think what we've seen is that both the volume and the volatility has been pushed out of BTC and ETH and elsewhere. And again, all of these alt structured products, I mean, that's putting a very regular and natural downward pressure on the vol, which is ultimately trickling back into BTC and ETH vol.
I also I guess want to Sam joined back in. I think we also chatted before about this topic, but I think what do you think is the impact of the structured products? And I guess would also love to hear what Ming has to say on the topic too. And
yeah, so maybe Sam, you can go first, and then we'll have Ming give her answer.
Yeah, sorry about that, guys. I'm not sure what's going on with Twitter, but I have it installed on 2 other phones, so in case it drops off, I'll go on the other one. But to sort of answer the question in regards to the structured products effect on vol as a whole, we actually ran some analysis internally about this as well. And, long story short, I think over the past maybe 2-3 weeks, we've sort of seen that near these auction times, vol tends to get crushed around these auctions, which sort of suggests that these vaults are having sort of an impact on these centralized venues, particularly for Ethereum. But at this point, I think it's too early to sort of come up with a conclusive stance that these vaults are systematically causing vols to be lower across the board, partly due to the fact that there's also a lot of structural changes in the market. There's a lot of institutional folks who are just natural sellers of vol. And to try to distinguish that between these DeFi structured products is a bit tricky. So I would say that, as a whole, as we start seeing these DeFi markets continuing to increase in terms of their vault sizes, it might get to a point where DeFi vaults sort of dictate or have more of an effect than the centralized counterparts do. So that's sort of where I see things going.
Got it. Ming, would love to hear your thoughts as well on kind of the topic that we're just discussing.
Yeah, I think there's definitely, I mean, if you go to the exchanges, they definitely have this data. They'll be able to tell you exactly what volumes come from these vaults, what volume comes from other market makers, naturally selling vol. But the kind of the theoretical impact is, first, let's kind of distinguish between makers and takers. So makers are kind of continuously putting out quotes, creating liquidity. Takers, obviously, everyone who's selling vol is a taker. Everyone, all the retail users on these option vaults are going to be takers. So what happens when you have let's say a disproportionate amount of takers who are trying to sell volatility, is the makers are forced into a long vol position, and obviously they would rather stay market neutral and just collect the bid ask. So what happens when they're forced to take long positions is they're going to try to compress implied volatility because they don't want to be buying expensive options, and B, they're going to try to hedge. So if they're long volatility in all of these basically shit coins or altcoins, what they're going to try to do is they're going to try to offset that by going short in the majors. So basically that then compresses down volatility in Bitcoin and ETH. And so logically, that narrative makes sense, given the correlation between the majors and the altcoins and just general correlations within crypto as a whole. And so basically TLDR is you're forcing the makers into this position that naturally puts a ceiling on volatility and how much BTC and ETH can rally, due to their own desires to delta hedge and stay as market neutral as possible.
Perfect. Thank you so much for that great overview from everyone. Cool. So now, would love to hear kind of, what's next for options. I think, there are about like 10 protocols selling covered calls and puts. And I'm curious, like, is this about to change? And is there a need for new products? And let me first ask Stratus on this, specifically how 01 is thinking about this.
Yeah, I think right now, like we're seeing a lot of protocols like launching covered calls, protected puts all over the place. Like, and even like Ribbon itself, they're launched on AVAX, launching in another chain, or launched already, I believe, and coming to Solana as well. I think like people quickly realize that the people want that yield, like from all of this option selling, and for on the dev side, it's not that complex of a product to implement. So I believe like there is definitely a need like to come up with other strategies beyond protective like puts and covered calls, like to go above and beyond to offer like some new type of yield with different risk profile to attract new market participants and also avoid getting diluted by all new protocols. Like only on Solana we have around 5 protocols like this. Yeah, I believe 5, and there's a Ribbon coming as well. So how do you stand out like amongst like all of these protocols, whereas they're basically all coming like to LedgerPrime, Pattern Research, and a few other MMs to sell their options. So we'd love to hear like on our end, like we do hope like to work on other new option products, like providing a new type of risk profile, providing a new type of yield with different returns, hoping to attract other potential investors like into the new structured products and work closely. I think we're working right now with 3 of the protocols like Katana, Chest, and Friction on building those structured products, and also a few other protocols to compose over. And I feel like that this can provide like a new way for protocols like to build more complex systems for their users. I would love to hear like what others are thinking about this topic.
Yeah, sure. So let's start with Sam. Kind of curious what you think is next for options.
Yeah, so I mean, I think you brought up a great point in the sense that right now it's sort of like becoming oversaturated in a sense that there's like 5 different protocols trying to do the same thing on pretty much each chain, and at least pertaining to options. And in the long run, do we really need these different types of protocols? Probably not. But I would say that, like, like you were saying, Stratus, like the key differentiating point, I think, of how these individual protocols will survive are their unique payoff structures that they offer, as opposed to just selling vanilla calls and puts. We've seen some projects like get a little bit more creative and look into like exotics that are, that offer investors a different payoff structure as opposed to just selling vanilla calls and puts. And what you guys are working on at 01, like offering users composable options like payoff that can be sort of integrated with other structured products on Solana. I think that's sort of a more sustainable approach rather than sort of like doing like a full-on fork of Ribbon Finance and just throwing it on XYZ chain. At least in my opinion, I think like in the short term we'll probably see more of these protocols come to place, given that it seems like it's a good narrative for this year, like DeFi derivatives. But sort of thinking from like the longer term standpoint, all of these will probably consolidate into like maybe 2 or 3 major players, and those will probably be the ones where they offer users the most value.
Cool. Pattern, would love to hear your thoughts on what you think's next for options as well.
Yeah, sure. I mean, I think like to me, there's a couple major themes in DeFi, right? And one Sam touched on earlier being UX, and I think what DeFi has done a great job of over the last year or two is building a friendly and easy to use UX for retail, and so yeah, I mean, I think with things like everlasting options and power perpetuals, what we're going to see is vol products and convex products being offered to retail in a way that's easy to understand and easy to interact with. So, I'm really excited about that. And, the second theme of DeFi being specifically composability and interaction between protocols, right? I mean, if you look at the centralized exchanges, there are maybe 0 partnerships between 2 different centralized exchanges, right? But in DeFi, the whole ethos is building blocks and composability. And so what I'm really excited to see, again, which Sam mentioned, is all of the various DeFi protocols on a single chain or across many chains interacting with each other and leveraging the products that they've each built to kind of ultimately offer a more robust or diverse product for the end user.
Cool. Okay, and so one of the kind of new things that 01 just announced last week was just kind of building a new kind of product called, Power Perpetuals. So Stratus, would love for you to kind of talk us through that and give us kind of the high level of what it is and why 01 decided to actually build it.
I think when we were building a one, we had in mind like to build a product with which we can experiment a lot, which we can pivot, build robust products fast and efficiently. And initially, as everyone might remember here, like we announced everlasting perpetuals, but in reality, like we have a framework to support any potential perpetual product, even if sinusoidal perps, if anyone's interested, still looking for active buyers for that. But overall, like why we decided like to first go with power perpetuals is because compared to, let's say, options and everlasting in general, like there is a lot more simplicity to them in a sense for a consumer. Here's an option which basically has a price of a squared index price. So for people like who have like very bullish beliefs about certain coins, they can easily understand that if I'm buying this coin, I'm getting a squared return. And obviously, like the thing, once you dive deeper, you need to understand better, like the funding rate behind it. But overall, like the concept is simple in terms of returns. But what it also provides, it has like a ton of interesting properties which can be explored when it comes to composability and building structured products on top of it. And that's why like it can offer potential hedge against impermanent loss once like funding goes down, which can be a topic of its own once we work more on that with other protocols. And when it comes to structured products, when combined with a perp, you can build a product which basically shorts like volatility and provides you a yield for participants similar to covered calls or protected puts, but it's just like a different system. And as well as like we obviously also support perpetual futures. And the reason for that is that because like we wanted a full-fledged protocol which allows users like to trade their like traditional product, which is like perpetuals, and as well as like try something new as well.
Awesome. Thank you for that great overview. I do have one question. So Ming, you mentioned this a bit in the beginning, and I kind of want to bring it back. So this will be a two-part question, but the first part is like, what has really attracted kind of more retail users to traditional finance options? And the second part, I'll throw back at Stratos, is what is 01 doing to attract new retail users? And so that's really kind of what I'm wondering. And I'll let Ming go first, and then I'd love to hear Stratos your thoughts.
Gotta say it's the memes. So always about the memes. So even before they were officially called memes, I guess, Black-Scholes was kind of the meme of the 70s and really got all the nerd physicists excited about options. But I think there's been several moments in time where volume and activity have really picked up. So in the beginning, when basically all the physicists of the world lost their jobs and Fermi labs closed and they all went into financial engineering, and of course they go into volatility because that's where they have an edge. And they were just trading systematically in large volumes, and so that that was just a huge injection of liquidity into the market for structural reasons. And then of course, as soon as the integrations, as soon as retail-facing broker-dealers, the self-directed brokers of the world like Robinhood, Interactive Brokers, etc., started offering, single stock equities or equity options. That was, obviously just distribution channel was another boom. And then finally, when they went to zero fee options trading, that was the third boom. And then, COVID, fourth boom. And so kind of to summarize, like what has accelerated options growth, it's been, all the kind of fundamental reasons why options are attractive, given you can use them to hedge, given you can use them for leverage, express a bear view, etc. And then the market forces, which generally kind of focus on memes and distribution channels.
Awesome. Thank you so much for that. Stratos, really curious, like what is 01 doing to really bring retail to this new innovative space?
Yeah, I think meme highlighted like a very important component in like entire crypto. Like memes matter a lot, and I think like when it comes like to our approach to this, like we want to find a product which easy to understand and which we can explain easily on UX side and make everyone like easily onboardable to this new protocol. I think like after initial version, like we have a few plans on simplifying the interface, like making it a lot simpler for users to use. And that's one aspect of it. And I think like when it comes like let's say to power perpetuals, what we are working on is actually tokenizing your position. So you can imagine like instead of just like going on a platform going long a power perpetual, you can tokenize your power perpetual and hold it as a coin. And I guess like this simplifies a lot of complexity around it and can attract other participants who are not there like to just day trade it, but actually hold it like for a month or two. And that's like one thing which we're planning to simplify it. But I think there's a lot of like challenges on making a lot of like options vocabulary easily accessible and the UI in general, because like once you go to let's say Deribit or Open, you have like so much information thrown at you, and if you never treated options, you're not likely to try when you have like all this info to process. At least like when it comes like to powers and everlastings, you have a little bit like simplification when it comes to this. There's no strikes and there's no expiration dates, which already makes it a bit easier for people to grasp. And just like I guess like long-term strategy is like to experiment, try new things, and improve UX around that, and find like an interesting products for retail to buy.
Great, thank you so much. So we'll go ahead and start taking. If there's any Q&A from the audience, please raise your hand and we can bring you up to stage to ask the question. And while we wait for some Q&A, one of the last questions we do want to go over. Sam, would love to hear your predictions for DeFi options for 2022.
Yeah, for sure. I would say in general, like it's pretty bullish, not to be a broken record, but I would say sort of the growth we've seen just over the past few months in these option vault like products have sort of set the narrative, at least internally, for justifying within the firm to allocate a lot more time and resources to DeFi options as a whole. How that plays out, like whether it be actually trading DeFi options, like more from the institutional side, that's a little bit harder to say right now. I would still say most of the flow in this year is going to be predominantly around retail-oriented folks. The innovations sort of that you guys are working on at 01, as well as like other projects as well, where they're trying to make like option like products like that are sort of structured into a token. I think that will be a pretty hot narrative, given that, as mentioned before, it allows for a lot more composability, and you can do a lot more things as opposed to just trading on like a centralized venue or like an order book on a DeFi project. So to recap, we're definitely bullish on DeFi options as a whole, and specifically looking forward to seeing sort of the composability of these products in the months to come.
Great, thank you so much for that. Akshay, would love to hear kind of your predictions for 2022 for the DeFi options space.
Yeah, sure. I mean, really just echoing everything Sam said. I mean, specifically the kind of proliferation of vol products across a bunch of coins that you couldn't trade options or earn yield on even a few months ago. I think the introduction of vol products beyond just vanilla calls and puts, and kind of like what you guys are working on at 01, specifically power perps and everlasting options, and then of course making the experience simple and easy to use and being able to do all of that on chain. I mean, that's something that like seemed so far out of reach even a year or a year and a half ago, and to see that like really coming to life this year, I mean, I think it's going to be really exciting.
Awesome. And Ming, would love to hear kind of, maybe not for DeFi, but, even the options market, your predictions for 2022. But if you do have a view on DeFi options, feel free to share it as well.
Yeah, so I mean, I think, options volumes are going to continue to tick up in both traditional finance and DeFi, in DeFi in particular. So I think what we need is a huge market crash. So right now, if you think about it, what is the difference between buying a perp? If I'm a retail trader, what's the difference between me buying a perp versus me buying an option? Like in either case, I get a ton of leverage. And the way I see it is in an up only market, there's no difference, right? Because you're not looking at the left side of the curve beneath y=0. And so the entire value prop, so the benefit of the perp over the option is that you don't have to pay for time value, and so there's no decay and like a negative carry in your position versus in markets that are not just up only but actually go up and down. You want that cap downside, and so that's when options start becoming really attractive. So I think that's going to be a catalyst, major catalyst for the uptick in options volume to pick up as well as structural volatility selling.
Awesome. Thank you so much for that. Cool. So I think we're going to wrap up, but maybe last question for Stratos. Is there any alpha you can share with us, of anything you can think of for 01 that might be interesting to share with the audience of those who attended today?
Yeah, I guess mainnet launch on 27th, and I guess a little bit of alpha, you want to be one of the first accounts to sign up and create your margin trading account with 01. So that's it, I guess, what I can share. Excited for the launch, and thank you, Sam, Akshay, and Ming for joining us today.
Yeah, thank you, everyone. And please do follow our speakers today, Stratos, Ming, Sam from LedgerPrime, and Akshay from Pattern. We really appreciate everyone taking the time to kind of listen in today. Great, thanks.
All right. Thanks for having us.
Yeah, thank you.